So one thing that we've seen in Silicon Valley as the startup ecosystem has evolved and grown, we've seen, unfortunately, a reduction in the level of risk that founders are taking. And we think this is a huge missed opportunity. So one thing we often work with founders to is think of kind of how do we level up their ambition and increase their appetite risk. And we do this in a thoughtful and strategic way. So the way that we think about this is a framework really in two areas. One is, what is the market or external risk that a company is taking? And on the other side, what is the execution or internal risk that a startup idea has? So we're going to break this down and think through a number of different components of these risk factors, really as a way to help founders to increase their ambition level. The biggest way for founders to have an outsized impact is often to increase their appetite and level of risk. And that is against some human nature. So let's break it down. Firstly, on the market and external factor, founders often have a unique product insight. What is that product insight? And then how does the market react to that product insight? So essentially, do the dogs eat the dog food? The fundamental component here is finding product market fit. So what is the product risk associated with it? You may have a founding insight. Does that translate to adoption within the market? The second area is, what is the scale or size of the opportunity? So for a venture firm like NFX, we need to see a certain level of scale to make it a venture-backed or business. There are many great companies out there, but they are not necessarily appropriate for venture capital. So we're looking for big opportunities with big markets or big potential markets, and also sufficient size to enable the company to build out a truly incredible product to capture that market opportunity. The third area is competition. What is the competition? Now, a little bit of competition is not a bad thing, but obviously too much competition is challenging. The way to think about this is really, what is the defensibility of the product that you're building? So a component of this is network effects, and we've written a lot about defensibility and network effects. Clearly, the greater the defensibility, the harder it is for others to reproduce, the more competition there is, and that erodes margins and market share, making it harder to build a significant business. So what is the competitive risk in a market? So the fourth area is, what is timing? What is the timing opportunity for the company? And so we often see that being too early or too late is often as bad as being wrong. Typically, markets go through this evolution where there's long periods of really not much is happening. Then suddenly, a market opportunity takes off. A combination of technology innovation, a change in the economics of an underlying business, or a cultural catalyst that creates this explosion. And the trick is, how do I build and launch my product at this timing? Being up here is wrong. Being up here is incredibly challenging unless you have huge amounts of patience and capital. And there's an article called Why Startup Timing is Everything. You can find on the NFX essays section on the website. And finally, what is the legal or regulatory environment? As many of the companies that have the most radical ideas and many of the most interesting ideas go up against a legal or regulatory framework. The important thing here is to navigate that in a thoughtful way. While this is an element that's often outside your control, a way to think through it is what is the value I'm providing to key constituents in this ecosystem? And if I'm not providing significant value, then it creates huge amounts of downstream problems. We often see that in rapidly moving technology-defined markets, the legal framework or regulatory framework often lags the innovation that's happening in the market, and that can be okay. And an example of this is perhaps self-driving cars, fully autonomous cars. They're clearly illegal, or certainly unlicensed versions are illegal right now, but that doesn't necessarily mean they're a bad idea. So how can you thoughtfully navigate the legal or regulatory risk in an environment? And some of the biggest opportunities require founders to go up against them. On the execution and internal side, the first and most critical is team. The team DNA. What is the capability of the team enabling you to execute on building and scaling an incredible business and incredible product? This not only what is the capability of the team, but also what is the culture that the team embraces and defines, enabling them to work effectively together. And also, what is the ability to recruit future members of the team? Hiring a future VP of sales or VP of finance. If a team is not able to do that, then that's a huge risk on the company. The next is product execution. What is the product execution risk? So often you may have an incredible founding insight, but if you can't actually ship the product and execute on the technical innovation required, then it's enormous risk. As an investor, we generally love companies that are taking a high degree of technical risk. Huge defensibility, really novel, and really creating a significant barrier to entry. But what is the risk that actually you can ship and deliver on the promised product vision? And finally, what is the fundraising risk? Now, fundraising is both a little bit external in that the finance environment will ebb and flow, but the best companies can raise money in good markets and bad markets. And certain founders and certain teams have a fundraising superpower. It enables them to raise money and bring on board resources from third parties. And so as you think about what is the business and what is the plan, what is the funding required to achieve that vision? And what ways can you mitigate fundraising risk? So there we have it. We have market external risks. What are the product? What are the internal and execution risks? And the very best founders that we see are able to navigate those external risks and strategically think through how they impact their product vision and company building, as well as the internal risks. To learn more and to read more detail about this and other articles, check out the full essay on nfx.com.